Have you ever wondered what really gives gold and silver their value? Beyond just how they look. Well, in this explainer, we're going to connect the dots from your own finances all the way to the global stage. We'll unpack why people are drawn to precious metals and take a look at the massive system that's supposed to keep the whole market on the straight and narrow. Ready? Let's dive in. All right, here's our game plan. We'll start with a problem that probably feels pretty familiar, the vanishing dollar. From there, we'll see why gold is often seen as the answer and how you'd even go about getting some. Then we're going to zoom way out to look at the global markets rulebook, the 4 big ideas that hold it all together, and what those rules actually mean for every single trade. So first things first, let's talk about the big reason so many people are looking for alternatives in the first place. And that is the slow, steady drip of your money's buying power disappearing. You know it as inflation. Okay, look at this number. $47,000 and change. That's what the average new car costs today. Now, get this. Back in 1970, that same new car would have set you back just about $3,500. That's a mind-blowing jump, right? And it's a crystal clear picture of how much the value of our money has changed in just a single lifetime. Here's another way to think about it. In 1970, a single dollar bill could get you 1.5 gallons of gasoline. Pretty good. Today, that same dollar gets you, maybe 1/3 of a gallon? Your money is just buying less and less every year. So what's a person to do? Well, for a whole lot of people, the answer is an asset that's held its own for thousands of years. We're talking about precious metals like gold and silver. They have a long, long history of acting as a hedge when inflation starts to bite. And you don't have to take my word for it. Look at the timeline. There's a clear pattern here. The crazy stagflation of the 70s, the Great Recession in 2008, the pandemic in 2020, and even right now. When things get shaky in the traditional markets, gold has often been the go-to asset for people looking for some stability. The famous investor Ray Dalio really nails it with this quote. He says, understanding gold is just part of understanding how history and economics work. It's not just some pretty metal, it's a serious financial tool with a track record that stretches back centuries. So you might be thinking, okay, I get it. But how does someone actually, buy physical gold? Well, there are really 2 main ways to go about it, and each has its own set of perks. Path number 1 is a simple cash purchase. It's straightforward. You buy the metals, they're yours. You have immediate, direct physical control. The other path is a precious metals IRA. This lets you hold actual physical gold and silver inside a retirement account, which can come with some nice tax advantages. It's a pretty powerful way to diversify your long-term savings. So we've covered why you, as an individual, might buy gold. But now, let's pull back the curtain. Because behind every single one of those purchases is a massive global wholesale market. And the whole thing is run by one single, incredibly important rulebook. And here it is, the Global Precious Metals Code. Seriously, think of this as the official rulebook for the pros. The big banks, the refineries, the major trading firms. Its whole reason for being is to make sure that the entire wholesale market is playing fair. The mission is stated right here, to promote a robust, fair, effective, and appropriately transparent market. This isn't about telling anyone what to buy or sell. Nope. It's about building trust. It's about setting the ground rules for how the big players should behave, so that everyone, from a central bank down to a big investment firm, can trade with confidence. Now, this entire massive code is actually built on 4 fundamental principles. You can think of them as the 4 pillars holding the whole thing up. Let's break them down. Okay, the 4 pillars are ethics, governance, information sharing, and business conduct. Together, they create this complete framework for how to act professionally. We're going to zoom in on the first 2, ethics and governance, to really see how they build that foundation of trust. So, pillar number 1, ethics. This is the bedrock, really. It's the simple expectation that everyone participating in this market will act like a professional and in a way that protects the fairness and integrity of the entire system. And this isn't just some vague idea. The code gets specific. It means you have to act honestly, you have to treat clients and other firms fairly, you need to use industry best practices, and you have to be really careful about identifying and managing any conflicts of interest. It's the basic code of conduct for everyone. Now, the second pillar is governance. This is basically the show your work part of the code. It says that a firm can't just promise to be ethical, it has to build systems and structures internally to actually prove it, with clear responsibilities and solid oversight. So what does that actually look like? Well, it means having a compliance team that is separate from the traders making the deals. It means having clear policies for whistleblowers so people can report problems without fear of getting fired. And it means having systems to manage all kinds of risks, from market risk to operational risk, and having those systems checked regularly. It's all about building a structure of real accountability.
Okay, to really see how these principles work in the real world, let's look at a super important concept from another pillar, business conduct. This is all about the crucial difference between a firm acting as an agent versus a principal when they make a trade.
Now, this might sound technical, but it is a huge deal. When a firm acts as an agent, they're working for you. They're just executing your order, and they don't take on the risk themselves. But when they act as a principal, they become your counterparty. They are the ones selling to you or buying from you, and they take on the risk. The code demands absolute clarity about which hat a firm is wearing because it totally changes who's responsible for what. So, there you have it. We went from the inflation affecting your wallet all the way to the global code that oversees billions of dollars in trades every single day. This rulebook provides the framework, the foundation for a fair market. But in a world that's always throwing us economic curveballs, you have to wonder, is any system of rules ever truly foolproof? That's a question worth thinking about.